Good evening and good morning to everyone wherever you are, and I take this opportunity to wish all of you a Happy New Year. Thank you for joining us today as we share some perspectives on our Q3 FY24 performance. Before I get into a discussion on our quarterly results, I would like to take a moment to note that this quarter also marks the completion of 1 year for me as the company's CEO. And it has been a very rewarding year in every way. I wanted to express my deepest gratitude to our board, each member of the team Birlasoft, our customers and partners, and of course all of you for your trust and support. I would also like to take this opportunity to welcome Manjunath Kaikonnahalli, or Manju as we call him, who recently joined our leadership team as the Chief Executive Officer for the rest of the world region. The ROW region comprises of all geographies outside the Americas. It includes Europe, UK, Asia Pacific, including India. The Americas, as you already know, is led by Mr. Roop Singh, who serves us as the CEOs for the Americas region. Manju is a seasoned tech services industry professional and possesses an exceptional leadership record with unique knack of fostering and lasting client relationship, and has successfully guided large-scale digital transformation programs for customers. Over his 25-year tenure, Manju has served at multiple leadership positions where he has conceptualized and spearheaded numerous strategic programs across various business units. Prior to joining us, Manju held leadership position in a Tier 1 tech services firm with P&L ownership and client relationship and management responsibilities. He will be based in our London office. Together as a team, we are committed to transforming our company to become sharply focused on select verticals and service lines, and to culturally become more nimble and execution-orientated. Now let me come to our Q3 results. I trust that all of you have seen our Q3 results, and we are very pleased to report a strong and well-rounded operating performance. We've delivered robustly on each of the key fronts, whether it is growth, whether it's margins, cash flows, and deal wins, during Q3. Our revenue for the quarter grew at 1.8% in constant currency terms and 1.9% in dollar terms. This is QOQ growth to reach a figure of $161.3 million, and as you know, this is a seasonally soft quarter. The growth performance also comes on a back of a very strong Q2 performance. In rupee terms, our revenues for the quarter increased to 1,343 crores, a growth of 2.5% quarter-on-quarter and almost 10% year-on-year. We've recorded an expansion in our EBITDA margins, which now stands at 16%. We delivered this margin performance even after absorbing a large part of the organization-wide compensation hike and promotion that became effective from the 1st of September 2023. So while we had 1 month of impact of that in Q2, we took the full impact of the wage hike, and that is reflected in Q3. Our PAT performance has also been strong. We delivered 11% QOQ increase in our profit after tax, taking the figure to 161 crores. I would like to call out that this is for the first time in our history we have crossed the 150 crore net profit mark. In addition to that, we have also seen our cash flows and cash balances improve. These continuous improvements are an outcome of both operating leverage as well as our sustained push to enhance our operational efficiencies. Our deal wins in Q3 have also been very encouraging. As all of you know, it is a short quarter, And even though it was a short quarter, we were able to deliver total signings of a total contract value of $218 million. Now coming to some operating performance, our robust operating performance through the course of this financial year reflects our sustained execution of multiple sales and efficiency initiatives. One such initiative, Optimus, is an internal tech transformation program that we rolled out across Birlasoft a few months ago. We have undertaken this initiative to scale ourselves as we pursue the next generation organization capability. As a part of Optimus, we are focusing on the next wave of profitable growth, industrializing our delivery, becoming a partner of choice in emerging technologies, enhancing our employee experience, and building a best-in-class talent pool. When Kamini talks about the detailed performance, she will touch upon the Optimus program in a little bit more detail. So in conclusion, our strategy of leveraging our strength and retaining and mining existing accounts has been playing out very well. And this is visible in our deal flows as well as our top account growth. Our total TCV for the first 9 months of FY24 is 9% higher than the total TCV during the same period in FY23. Our efforts is to wrap up Q4 with sequentially higher deal TCV signings, and that will position us very well for the next fiscal. However, I would also like to state that there has not been any material change in the macroeconomic environment as compared to a quarter or two ago. So we see our customers optimizing their spends, the deal sizes are getting smaller, and the customers are very cautiously optimistic when it comes to their spends. In the immediate term, because we were able to offset the impact of the furloughs in Q3 with certain short-term projects, that will also reflect any bounce back in the fourth quarter that one usually expects. We believe that our focus on actively driving and creating proactive deals on execution and on capability building will enable the next phase of our growth journey. As we have said before, we continue to remain very focused on execution as we go forward, and we will obviously take one quarter at a time. At this point, I would request Kamini, our CFO, to share her perspectives on the quarter. Kamini?
Thank you, Angan. A very good day to all of you. I would like to wish you a very happy new year, and thank you very much for joining our call. Let me take you through the financial highlights for the third quarter of the current financial year. As you would have seen, we have reported revenues of 161.3 million for Q3 24, which is a growth of 1.9% quarter on quarter in dollar terms. On a constant currency basis, the same growth translates to about 1.8%. This strong growth in a seasonally weak quarter has been driven by ramp-ups as well as our attempts to pursue and execute short-term projects and change requests in order to partially offset the impact during the quarter. Hence, our operating performance for this quarter does not reflect the full extent of headwinds from furloughs that normally is expected. We have also sustained our account mining efforts during the quarter, resulting in growth across our key accounts, with our top accounts growing at 3.2% quarter on quarter. Amongst our verticals, energy and utilities has delivered the highest growth and has been up 7.9% due to new deal ramp-ups. Both manufacturing and life sciences have grown at 1.7% and 1.3% quarter on quarter. BFSI as a vertical tends to be relatively more affected by furloughs and hence has registered a quarter on quarter decline of 0.7%. As far as our service lines are concerned, we have seen growth across by infrastructure, which was up by 9.6% quarter-on-quarter, digital and cloud at 2.1% quarter-on-quarter, reflecting ramp-ups in a few new cloud deals as well as some one-time revenues. The ERP service line continues its sequential growth trajectory in Q3 and has been up at 0.5%, whereas data and analytics has recorded a growth of 1.1% sequentially. I now move on to our margin performance. EBITDA for the quarter stood at 25.7 million versus 25 million in last quarter. This translates to a 16% EBITDA margin, which is a marginal expansion of about 20 basis points quarter-on-quarter. Angan has already touched upon the fact that in this quarter, we have absorbed the impact of 2 incremental months of wage hike during the quarter under review, and this has been achieved despite that. A lot of operational efficiencies and better utilization and the benefits of the project work and change request has enabled us to maintain our margin performance. Our other income has shown an increase quarter-on-quarter. About 1.5 million of that has been on account of restatement of forex on account of branch results. As a result, our PAT for the quarter has increased to 19.3 million. This is up 10.4% quarter-on-quarter, translating to a PAT margin of about 12%. I will now briefly touch upon some of the key balance sheet items. We've seen a sequential improvement in our quarterly collection during Q3, resulting on a DSO days which is at 51 days. This is the best DSO level that we have seen in the last 8 quarters, and sustained strong collections are also a testimony to our execution and delivery capabilities. Our operating cash flow during Q3 has been at about 141% of our EBITDA. As a result, our cash and bank balances have increased by 17% quarter-on-quarter to 203 million. Before I conclude, I would like to elaborate a little bit on our tech transformation initiative called Optimus that Angan had earlier alluded to. Over the past few months, we have been undertaking multiple operational efficiency initiatives while also making the investments which are necessary to drive growth in our business. Optimus, which was conceptualized and rolled out earlier during the current financial year, simplifies and scales our processes, emphasizing automation at the core. So this program is aimed at enhancing workflows through simplified processes, touchless operations, persona-driven dashboards, data insights, and decision intelligence. This therefore, in essence, is both a business and technology transformation initiative that strengthens our foundation for scaling and efficiently running our businesses, showcasing possibilities to our customers, and bringing operations and strategy closer together. With that, I would like to hand back to Abhi.
Thank you, Kamini. Operator, can you please start the question and answer session?
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 to join the question queue. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ravi Menon from Macquarie. Please go ahead.
Hi, thank you. And congrats on a really good quarter. I wanted to ask about the on-site revenue proportion reducing. Is that something that was impacted by furloughs or holidays, leave, etc., taken more on-site, or is this an operational shift that will endure?
Yeah. So, Ravi, from a furlough perspective, we saw some amount of furlough coming up in on-site, the on-site work that we deliver, but we also saw furloughs offshore. And specifically in a segment like BFSI, we saw furloughs, but we were able to mitigate some of it because of short-term project work that we were able to pick up, and as well as the change requests that we were able to drive from customers. But definitely we got impacted by furloughs. Kamin?
Yeah. And Ravi, the only thing I would like to add is that some of our new ramp-ups have actually happened offshore, which has also resulted in the marginal shift that you are seeing between on-site and offshore.
Thank you. Appreciate that. And it looks like the new deals are also more fixed price in nature, because I see the fixed price execution is also going up. So could you give a little bit of sense of, what sort of projects these are, in specific areas, large programs where you're seeing traction?
Yeah. So Ravi, our fixed price portion of the overall business is definitely going up. We are able to work with our customers to deliver work which is more repeatable in nature, which is why you will see a little bit of more traction on the annuity business side. But look, as we mature our relationship with our clients, and as we do more digital work as well as more AI work, the kind of work that we do and the kind of commercial models that we work with our clients will essentially vary from client to client. Now, our anticipation is it would most likely be T&M as we deliver more AI work for our clients, but the repeatable work will be more fixed price.
Thank you. Appreciate that, Angan. And one last thing on the SAP HANA. I know that you guys have a strong SAP practice. So is that deadline for HANA transition to HANA, is that giving you some traction in the market?
It is. And I think that's a big opportunity for us. I mean, we have, like I had said in the last quarter as well, we have a new leader who leads our ERP practice right now, and our relationship with not only SAP, but the other, partners are also improving. And I think that will represent a big opportunity for us over the next, couple of years, Ravi.
Thank you so much. Best of luck.
Thank you. The next question is from the line of Abhishek Bhandari from Nomura. Please go ahead.
Yeah, thank you, Angan. Congrats on a good quarter. Had questions. First is, despite the furlough headwind, we were able to show a pretty strong growth in Q3. So should we think that now from here on the growth should accelerate in Q4 and the rest of fiscal 25?
Yeah, so fiscal 25 is a little hard for us to comment, Abhishek, because the macroeconomic situation has not really changed, right? It is still quite challenging, and we have to take one quarter at a time. I think the team has done an incredible job on execution in Q3. Though we were faced with furloughs, we were able to kind of mitigate that with a lot of short-term projects, a lot of change requests like Kamini spoke about earlier, and that enabled us to deliver some solid results. Now, how will Q4 look like, or how will FY25 look like is hard for us to say, and as you know, we don't really give guidance, but our commitment to all of you is that we will be focused on execution, and we will take one quarter at a time.
Sure. Thanks for that, Angan. And then second and last question is your senior leadership hiring largely done, or are there any roles left to be filled? And two, with all this senior leadership, being done in place, is there any material impact on the cost, what we should be thinking about from a forward perspective?
Yeah. So, Abhishek, again, first of all, at the senior most levels, all the hiring is done. I mean, we will, of course, hire for some strategic roles like the Chief Strategy Officer, etc., but that is, one or two other senior leader hires. But apart from that, whether it's our vertical heads, whether it is our service line heads, our client partners who manage some of our largest relationships, the CXOs are all hired. But remember, Abhishek, that we need to continue to do our investments, like I had said, in technology, the tech transformation that we have embarked on, we will do investments there. We will do investments in our domain capability. I still think that we have got a long way to go in building out world-class domain capability, and we need to do a lot of investments on that side. So one is the people hiring, which is important, but we must also understand that we are investing not only in people, but processes, tools, technology, so that we know we can deliver growth over a period of time and not just quarter on quarter. And Abhishek, I've always said this, and let me repeat this again, that we are building the business for the next decade, not only for the next quarter. So we will continue with our investment phase over the next few quarters or even few years even.
Got it. Thanks a lot, Angan, and all the best for calendar 24.
Yeah. Thank you, Abhishek.
Thank you. The next question is from the line of Vibhor Singhal from Nuvama Equities. Please go ahead.
Yeah, hi. Thanks for taking my questions, and congrats on a very solid performance in the seasonally weak quarter. So two questions from my side, one for Angan and one for Kamini after that. So Angan, just wanted to basically understand a bit more on these short-term projects that you mentioned, which help you tide over the furloughs in this quarter. So if you could just elaborate a bit more about, the kind of duration of these projects, which specific verticals or the service line what these projects were from. And do you believe that this could be a strategy for us going forward, that we would continue to take on these short-term projects? Or was it just a kind of a one-time effort to tide over the furloughs which we had expected in this quarter?
Yeah. So Vipul, let me first take this question, and then maybe I'll ask Kamini to take your next question, because I think that was for Kamini. So look, I mean, from our perspective, we have a clear laid out strategy to mine our accounts and, essentially work with lesser number of clients, but do meaningful work with our clients and grow our clients over time. And as you start doing that, what we've realized is the clients trust us to even execute programs that could be short-term. Now, the short-term programs, it's a little hard to say. It could be 6 months, it could be 9 months, could be a year or whatever. But I think we are now getting into a situation where it will be a sustained strategy for us. Customers trust us to deliver those programs for us. And, it is also a manifestation of the fact that customers are now willing to work with us on their change requests if they have any. So I think it's a combination of the ability of us to take some programs and deliver it in a short period of time, which are very time-bound, but equally our ability to work with our customers from a change request perspective, which adds a lot of value, not only from a revenue, but from a margin standpoint. So hard to say that what is the time frame, because it varies from customer to customer, but will it be a strategy for us going forward? Absolutely. And as we scale up our accounts, you will see a lot more traction around short-term projects as well. So your second question for Kamini, that was?
Yeah. So before that, if I could just have a follow-up on these short-term projects. So as you mentioned, it's going to be a strategy for us going forward. Now, assuming these projects are also captured in our deal flow numbers, so would that mean that our deal flow numbers could be a bit volatile? Because, these short-term projects would not be, recurring every time. There could be some more in one quarter and a few less in some other quarters. So would that be, of course, it's just on a continuity basis that I'm asking. So would that be lending some volatility to our deal flow numbers?
No. So Vipul, you must not look at it from that perspective. Look, we have a steady business, the annuity business that we run with our clients. We also are working with our clients on their tech transformation work, on their digital transformation work. So that kind of work continues. The short-term projects are, if a customer wants help in executing a particular program, which is very important for the customer, we jump in and help them execute the program. Now, this can happen every quarter, and it could vary from customer to customer. Maybe there is one quarter where some of our manufacturing customers want help with that, and we will be able to step in and do that. And in certain quarters, even financial services customers could come and, help us. So, I can't really comment on volatility from a future quarter perspective, but all I'm saying is we are very pleased with this, because for the first time in our history, customers are actually working with us to do these short-term projects, which also tells you that we are going up the value chain with our customers.
Got it. Perfect. I think that's a great, thanks for this explanation. Just my second question for Kamini. I think in this quarter, we've seen margins being very strong, despite 2 months of wage hike. And I think one of the reasons probably is that our utilization already is at around 87%. So basically, do you believe that the levers that we would have, let's say, have for further margin expansions are pretty much exhausted, and going forward, we could probably have margins stabilizing at current levels? Or do you believe there are some still left up your sleeve, which can probably lead to potential margin expansion over the next few quarters, not as a specific time frame, but over the, let's say, medium to long term?
Vipul, you're absolutely right. I think we have really stretched our utilization quite a bit, as you can see at 87%, and the other operational levers. I think a lot of the initial wins have already been taken. While we will still continue to find opportunities, I don't think we have too much of a difference that you would see from a margin standpoint. As Angan mentioned earlier, we will continue to invest back into our business. In addition to all that Angan spoke about, we will also be investing in the rest of the world with Manju coming on board. I would think that you should probably expect it to be stable at this level.
Got it. Thank you so much for taking my questions, and wish you guys all the best.
Thank you very much.
Thank you. The next question is from the line of Mohit Jain from Anand Rathi. Please go ahead.
Hi, sir. Two questions, both related to revenues. One is, did you guys mention in the opening remark that there's some one-time revenue which has come in this quarter? And therefore, Q4 growth should be little less compared to what would be the case usually?
Yeah. Mohit, like I was explaining in the earlier call with Vibhor, the one-time revenue is more to do with the projects that we are delivering for our clients. You should not look at it as one time. It is more about project-led revenue that we have been able to get. But apart from that, we were also able to drive a lot of CRs, change requests with our customers, and that has helped us not only on the margin side, but also on the revenue side. Now, whether these change requests will continue in Q4, the one-time revenue, which is really project revenue, will continue in Q4 or not, it's hard to say. But I can only tell you that now customers, like I was telling Vibhor earlier, our customers are now willing to work with us on specific projects where they believe that we can add a lot of value.
So they're not really one time, but we should say that possibly it is part of our strategy, and we have to see how these change requests happen in Q4, right?
That is correct, which is what I told Vibhor also, Mohit, that it is not a one time, it is more project-driven work. And it will be a part of our strategy going forward.
Right. And second was on the slight TCV decline on a YOY basis. What will you attribute this to? I'm looking at net new, and then your comment on Q4 being slightly higher. I thought Q4 is seasonally very strong for us when we look at total TCV.
Yeah. So it's a great question, Mohit. So Mohit, look, I mean, signings or TCV as we call it, right, also depends upon the clients, so kind of clients that you serve and whether the clients take a decision in a particular quarter or not. All I can tell you is we have not lost a single deal. Our pipeline is only improving. And if you look at our 9-month performance, our signings are 10% higher than the corresponding 9 months in FY23. So I think we are only improving. I agree with you, and I take your point that for this particular quarter, which is a short quarter, we had a little bit of a decline in signings. But I'm not so worried about that, Mohit. It is only because the deals are getting pushed out. And as you know, the macroeconomic situation is where it is. And we are looking at it very closely. But we've not lost deals, and our pipeline is improving, which is very pleasing for us.
Okay. And on 4Q being slightly higher, like because last year we did very well on the TCV front in 4Q. So should we expect some YOY growth, or do you think it will be very similar to third quarter?
Again, hard to say. See, because unlike revenues, Mohit, signings is a manifestation of whether the client is going to sign in that particular quarter or push it out to the next quarter. So I don't think signings can be compared the way you're comparing it. Though I know, traditionally YOY, we need to show some growth. So we will see. I can only tell you that our pipeline is strong. We will work with our customers to help them in their transformation journey. And our endeavor will be to sign as much as we can. I mean, that's all I can say. Now, whether it'll be far better, a little better compared to 3Q or last year 4Q, I can't say at this point in time, Mohit.
Right. And last year on margins, like earlier we were of the view that potentially our margins should go up. This is from a longer term perspective, more towards 2-year to 3-year perspective. But right now we are saying that we should be at 60 more or less, and then we have to see how things progress. Is that the right?
Yes. And Mohit, you must look at it from a perspective in terms of what we are building for the long term, right? Margin is one way to look at it, but the other way to look at it is, what investments are we making to build up our capabilities, to build up our domain, to build up our front-end, teams which go and mine accounts. So like Kamini suggested, that our endeavor will be to keep margins in a narrow band, but you must also look at it in conjunction with the fact that we will invest a lot more in our business. So that we can bring a long-term
The band can be considered like 16 to 17, or where is that band?
Hard to say. So, we will focus on execution, Mohit, for sure. Our endeavor will be to keep it in a very, very narrow band as we continue to invest in our business.
Perfect, sir. Thank you and all the best.
Thank you, Mohit.
Thank you. The next question is from the line of Manik Taneja from Axis Capital. Please go ahead.
Thank you for the opportunity. Congratulations, Angan, for the splendid performance. I had a couple of clarification questions. First question essentially is with regards to our client metrics. If you look at our total client base, that has been coming off over the course of last 12 months since you joined. So just wanted to understand, where are we in the journey to essentially cut the long tail of accounts so that we can focus on customers who we can mine and grow with? That's question number one. The second question was for Kamini with regards to our margin performance. Given the significant increase in offshore revenue mix, and I do understand we gave some wage hikes during the current quarter, despite that, our gross margins essentially seem to have come off. So what could have driven that change? And also, if you could talk about the factors that drove the decline in terms of non-manpower expenses.
Yeah. So Manik, let me talk about the clients first, right? If you remember 1 year back when I joined, I had clearly laid out a strategy of working with fewer clients, but building long-term relationships with clients and mining our clients to get the revenue profile to the different bands. And as you know, in our industry, we can build 10 million clients, 25 million clients, 50 million clients, 75 million clients. So you'll be happy to know that our top 20 or even our top 10 and top 20 client lists have actually shown 3.5% growth quarter on quarter, which in my mind has been a solid performance. Tells you that our client mining strategy is playing out. Now, we obviously want to work with lesser number of clients, which is why, we are strategically trying to reduce our tail as much as we can. Now, ideally, are we there yet in terms of the number of accounts that we want to serve as we continue to grow our business? I think we are almost there. We may probably cut back another 10 or 15 clients, but ideally, I feel that the 250 number, anywhere between 200 to 250 number is the right number. But again, this number may vary from time to time or quarter to quarter, depending upon how we are seeing the market, and we are keeping a very close eye. But we have very significantly cut our tail over the last 12 months, and that is showing up in the number of clients. Now, I just make one point on the margins, and then I will hand it over to Kamini. Look, we've been saying it all along that we will continue to invest in our business, right? And in the quarter that has gone by, we have taken 2 months of wage hikes, which is why you're seeing a little bit of a pressure on the gross margin side. But we've been able to execute very well. And Kamini also mentioned that our hit was almost 1.5%. And because of the strong execution that has been done by our teams, we've been able to mitigate all of that, right? So you must look at it from that conjuncture. On the people cost, I'll ask Kamini to comment.
So Manik, I think Angan has covered that to an extent. If there's an increase as far as our people cost is concerned, it's largely been because of the wage hike. We've been able to use our bench a lot more effectively. That's how our utilization has gone up. And, we've also started moving out a lot of subcontractors and started having our employees do it. So with all these aspects, right, our gross margin has been flattish quarter on quarter. And I think that's the area that we will continue as we go forward while continuing our investments that we spoke about earlier, whether it is domain or it's, in building our leadership or it's in terms of the rest of the world organization and our tech transformation. So we will continue with that.
Sure. If I can chip in with one more question. In the recent past, you have spoken about the SAP upgrade cycle essentially being beneficial to our business. If you could talk about what are you seeing on that front, and how should we be thinking about growth in the segment over the next 18-24 months?
Yeah. So, Manik, look, we are pretty pleased with our performance around the ERP side. I mean, I will not just comment on SAP, but generally ERP in a bucket, right? You've seen even in this quarter, which was a short quarter, our ERP business actually grew by 0.5% quarter over quarter. We are feeling very confident. We've got a great leader who runs this space. We've hired a lot of new leaders in this business, in this unit. And I think there is a great opportunity for us in the market. Now, as far as SAP is concerned, that is clearly an opportunity, whether large companies or mid-tier companies in the United States, in Europe, as well as in the UK, there will be enormous amount of spend going forward in terms of the S/4HANA movement as customers move from on-prem to cloud. And, we will capture our fair share. We can't obviously talk customer-specific, wins or share of our business, but suffice to say that this business is seeing a lot of traction. Our pipeline is going up, and you will only see this business growing going forward.
Sure. And one last one, basically when we are thinking about a business from a longer term standpoint and you guys break up your TCV wins between both renewal and new business, while at an overall level our TCV growth in 9 months essentially has been extremely strong, it is largely led by the renewal business. So how should we be thinking about medium-term growth rate given the fact that new business TCV essentially is down on a 9-month basis?
Yeah. So it's a great question. So look, first of all, when you look at our renewal business also has a component of new, right? I mean, we measure our business between existing renewals, existing new, and net new, right? These are the 3 buckets. If you look at our second bucket, which is existing new, we've been able to add a lot of new revenue from our existing clients. But I buy your point that there is an opportunity for us to win more net new deals, and we are working on it. But equally, we are incredibly pleased about the fact that whether it's our top 10 accounts, top 20 accounts, we've been able to mine and get new business from our existing account and existing projects. And that has shown up in our revenue uptake. I'm thinking that will be a strategy for us, and we will continue to drive that strategy and look at that very, very closely, because that is a good growth engine. As I'm sure you know, that any time you keep scaling up your account, it also has a direct impact on your margin profile.
Sure. Thank you. All the best for the future.
Thank you, Mani.
Thank you. The next question is from the line of Shraddha from AMSEC. Please go ahead.
Yeah, hi. Congrats on another strong quarter. Most of my questions have been answered. Just a couple of few more questions. First, with the residual impact of short-term projects, do we see that things having some impact in our quarterly numbers as well?
So, Shraddha, again, when we say short-term projects, you must look at it as project work rather than short-term projects. I mean, short-term is just by definition, it could be 6 months, could be 1 year, etc. I don't see that as an impact. In fact, I see that as a strategy for our company to kind of work with our clients when our clients want to do short-term work. And that business, like, Kamini also mentioned earlier, would also be quite profitable. So it will be a strategy. It will be something that we will continue to do with our clients. And as we start growing and mining our clients, I think that it's a big opportunity for us to do it. Now, obviously, there will be volatility from quarter to quarter, but I'm not so worried about it as long as our overall account size keeps growing.
Right. And another question is on the segmental margins. When I look at the margins for our EMU vertical, it has come up quite a bit despite you have been mentioning that the large deal ramp-up was dominantly offshore. So, just wanted to check why did the margins in EMU come down?
Yeah. So look, we don't report segment margin from that standpoint, but I will tell you, you must look at margin uptake basis on two things. One is the kind of work that we do with our clients and the kind of impact that we can give our clients, right? So the ENU business, as you know, has shown a tremendous uptick in terms of the top line growth. And because of the top line growth and ramp up of new deals, the kind of work that we do with our ENU clients has helped us deliver a tremendous margin impact on the positive direction. Now, whether it's sustainable, not sustainable, hard for us to say. But Shraddha, like I keep saying, our commitment to the street will be focused on execution. We will play a significant role on our customers' transformation journey, whether it's through project work, whether it's through annuity work. And my strong belief is if we can continue to do that, we will only see upward trajectory, both on revenue and margins.
That's interesting. And then one last question. We've been doing well on client mining for the past few quarters, but if I look at the number of $10 million account sales, which came off 2 quarters back from 13 to 11, that number has still not moved up despite we doing very good in our top account. So how do we reach the client upward trajectory movement from now on?
For some reason, Shraddha, I couldn't hear your question. I mean, it was quite garbled. Can you repeat that, please?
I'm talking about the number of accounts in the $10 million bucket. So we've been doing very well in our top accounts mining, but despite that, the $10 million client number is stable at 11 for the last 2 quarters. So how should we look at the client upward trajectory movement to higher buckets, revenue buckets?
Yeah. So, I'm not going to be too worried about that, quite frankly, because, the one way to look at it is whether the 10+ million clients have declined by maybe 1, and, there is an Invocare situation that is built in there. So if I were to look like to like, maybe there is a difference of 1. But I think, Shraddha, the better way to look at it would be to see how our top clients have performed. Our top clients have grown. The top 10 clients and even the top 20 clients have actually grown 3.5% quarter on quarter. And we are pretty pleased with that performance. So I will not be too worried about that one number going down overall.
Right. Great. Thank you so much, Angan, and wish you all the best in future.
Thank you, Shraddha.
Thank you. Before we take the next question, just a reminder to all participants that please use handset mode only while asking your questions. The next question is from the line of Sudhir Guntapalli from Kotak Mahindra. Please go ahead.
Yeah. Hi, Angan. Congratulations on another quarter of great execution. Just one question from my end. Last 3-4 quarters, we had done quite a few fixes in terms of strategy, leadership, etc. And the benefits of it are already reflecting in our growth performance over the last 9 months, despite opening balance of some problems like client bankruptcy, etc. So 1 year down the line, do you think now Birlasoft has all the ingredients to be in the leadership quadrant in terms of mid-cap IT companies' growth? Or do you think some more fixes are needed or some more time is needed for us to be able to say that with confidence?
So, Sudhir, great question. Absolutely terrific question. Now, I will try and answer the question in 2 buckets. One is, have we done a lot of investments in the past 9 months? Absolutely. I mean, we've hired a lot of leaders. We've built a lot of capability. But as you know, this journey never ends. So we will continue to invest. And, Kamini also said this, we will continue to invest in our domain. We will continue to invest in our technology capability, in terms of people, in terms of training. So there are a lot of investment areas that we need to put in money in, including tech transformation of our own, operations. So those investments will continue to happen. Now, whether we are in the top quartile of growth or not is a manifestation of not only the investments, but also our execution capability. And our execution capability has significantly improved. So I'm quite pleased with what we have been able to do over the past 1 year. But am I here saying that everything is done? I don't think so. Far from it. We've got a lot more to do. But we need to really do this so that it's not a 1 quarter or 1 year journey. It's really a journey over the next decade, Sudhir.
Yeah, Angan, I agreed that there is always scope for further fixes. What I meant to ask was relatively on a relative basis versus, let's say, where our mid-cap peers have been in terms of capability, in terms of leadership, mining, etc. Are you now satisfied enough to feel that possibly we can be in the, let's say, top 2, top 3 companies in terms of growth performance going ahead?
I think so, Sudhir. That part we are confident that we have built a strong team where we can now, I'm at least feeling much more confident than I was feeling 1 year ago, if that's your question. But look, I mean, we still have a long way to go.
Perfect, Angan. Thank you so much, sir. All the best.
Thank you, Sudhir.
Thank you. The next question is from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. Just looking at the offshore revenue scale-up which has happened in this quarter, a clarification, is it fair to assume the volume growth in this quarter on a Q-on-Q is much higher and material versus the reported growth of 1.8% in CC terms?
So volume growth for us is a combination of 2 things, Sandeep. One is it's a combination of the T&M business and also combination of utilization, correct? So if you look at our utilization is at an all-time high at 87%. And some of the revenue growth is also happening because of higher utilization. Now, are we happy with the volume growth that we have got? We are. But is there an opportunity to improve that further? Absolutely, there is an opportunity to improve that further, given the client mining rigor that we have put in. I know it's not a straight answer, but I think the big uptick has also happened because of higher utilization.
Okay. And the second question is in terms of the 2Q earnings call. Angan, you clearly said 3Q would be softer because of furloughs, but we can see a bounce back of the growth in the fourth quarter. Versus now your commentary is slightly mixed about the fourth quarter growth pickup. Am I wrong in assuming that, or you still believe the growth bounce back could be solid in the fourth quarter versus third quarter?
Yeah. So Sandeep, look, I can't give a guidance. And the only reason I can't give a guidance is because the world is very uncertain, right? And Sandeep, I've said this before, even in 2Q earnings call, I've said that we will be sharply focused on execution. So we will see how the next quarter goes, right? Q3 was obviously softer than Q2. Q2, as you would have remembered, we delivered 3% plus QOQ, whereas in 3Q we've delivered about 1.92 or 2, to round it off 2% QOQ. So obviously it was softer because it was a shorter quarter. Now how Q4 pans out, we will see. We are focused on execution. We are working with our clients. And we will try and do our best. That's all I can say at this point in time.
Okay. And the update in terms of the large deal win of the last quarter, where we said the ramp-up will happen from April of the coming year, which is 2024. So any status update, any delay in that ramp-up schedule?
No, we are on schedule as far as next fiscal is concerned.
Okay. And the last question, Angan, this short duration deals, smaller projects, is it the nature of the deal is employee ramp-up deals, or these are slightly like a digital kind of a deals which are short duration, agile based, which converts faster? If it's a first one, then why are we want to increase that scale of business which has lower predictability and lead to a volatility in the revenue growth Q on Q?
So Sandeep, it's not the former. It's a later actually. So you said it very rightly. We do not want to do people ramp-up deals, right? We want to do deals which are shorter in nature only and only if we can impact our client's outcome. Otherwise, we are not interested in doing some TLM deals which are, people-based deals. The deals that we are talking about is where we actually create an impact for our client business outcome. And that is something we want to continue to do because that helps build our domain as well.
And is it fair to say clients are spending on these deals with some amount of green shoots happening on these side of the business? Because these deals are not heard through other vendors. You are the only one who is talking about. So is it the start of green shoots on the discretionary short duration projects?
No, I don't think that we should make that assumption just yet. Only what I'm saying is, Sandeep, because we are able to serve our customers better, and the customers now are begin to trust our execution capability, they are willing to do deals with us which are more domain orientated. But does that mean that we will get multiple deals like that or big deals like that? It's hard to say, because the macroeconomic environment has not changed, right? But I think within the situation that we are in today, because of our understanding of the client's business or the client's domain, we want to definitely capitalize on this, Sandeep. That's all I can say. Now, can this become a big revenue generator for me? May not be. Hard to say. But can this be a great area for me to learn, for me to get some good revenues and make good money? Absolutely.
Okay. Thanks and all the best, and congrats on a great execution.
Thank you, Sandeep.
Thank you. The next question is from the line of Dipesh from MK Global. Please go ahead.
Thanks for the opportunity and congrats for a very strong execution. Two questions, just on continuing on this short-term project. Just want to understand nature of this short-term project, whether client prefer not to commit for longer duration and that's why we are seeing such project coming to us, or if you can provide some more color about it, and whether the sustainability of that trend. Now, partly you touch upon about the relationship and trust what we build with client, but still I am not very clear whether it is client is not deciding and prefer to wait for some clarity to emerge and that's why this short-term project, or it is the way business works. If you can provide that clarity. Second question is...
Sorry, Dipesh, let me answer that question first, Dipesh, so that I don't forget this question. See, the second part that you mentioned is pretty right? So it's not that the customer is giving us a short-term project because the customer doesn't have predictability. It is about some amount of business impact they can create by using some technology transformation, and that is where we are playing in. And do not consider short-term project as a 1-2 month project. Or a short-term project could also be a 1-year project, right? It is not necessarily 1 month or 2 months, it could be 1 year. But it is still time-bound. I would rather call it a time-bound project. So point number 1. Point number 2, it is not so much about predictability of their revenue as much as it is their trust in a company like Birlasoft to be able to create that impact, right? Now, I can't give you more details than that because we are bound under NDA, so we can't talk too much about that, but suffice to say that for the first time in our history, we are playing more on the domain side rather than just on the technology side.
Understand. And the second question is about other expenses. Now, other expenses, I think we have seen good leverage this quarter. So first is whether any one-off in that, and second thing is subcon optimization since might have played out. So if you can give some color about how subcon has played out, maybe QOQ, YY comparison.
Yeah. So Dipesh, this is Kamini here. You're right, our other expenses have shown a decline. I think that's partly because of 2 reasons that you called out. One is, of course, in terms of subcon being lower because of, the furlough which is there. The second thing is that we also started, utilizing more of employees to deliver our projects, moving away a little bit from subcontractors, right? So I think these are probably the reasons that have driven this. Other expenses have also been lower given that it's a short quarter as far as some of our overhead line items are concerned. So I think these are all the factors as to why your other expenses are a little lower this quarter.
So coming a broader question was whether this 25 number, let's say 25% is here to stay, or we expect it to again normalize the way 9 months is the right way to look at it, or Q3 is more reflective?
I would
trend
say
perspective?
it's a slightly broader piece, Dipesh, because, while some of it would go up, some of that, has actually been made up through increase in cost and employee benefits. So I think it would be a combination of both.
Understand. Any quantification you can give for subcon? What percentage of our revenue would be subcon now?
We don't actually call out specific numbers, but suffice to say that, we're kind of reducing it and making an effort to build in those capability in-house.
Yeah. So, Dipesh, let me add to what Kamini said. Look, we had stated a clear strategy right at the start of the year that we will work on reducing our subcon, right? And we are very focused on reducing our subcon and building capability internally. That's good for the business. So clearly that has moved on the positive direction. But we will also have to work with certain amount of subcon, which is the need of the hour if the business needs it. But clearly that will continue to show reduction as we go forward.
Understand. Thanks.
Thank you, Dipesh.
Thank you. The next question is from the line of Apurva Prasad from HDFC Securities. Please go ahead.
Thanks for taking my question. Angan, do you expect a jump in the EN plus NN bookings in Q4? I'm asking this basis your comments on the deal pipeline and the new deal flat performance over the 9-month period.
Yeah. So, Apurva, look, our pipeline is strong. I can tell you that much, even from a EN, NN perspective. We have a lot of deals on the table from an EN and an NN perspective in our existing clients, as well as our pipeline is strong in net new clients as well. Now, whether they will convert in Q4 or not, I cannot say, but our endeavor will continue to be to close as much as a business as we possibly can. And not lose any business to competition. Now, because of the macroeconomic headwinds, if clients decide to push out signings, then it is what it is. But like I said, Apurva, our focus will be to maximize signings in 4Q.
Got it. Thanks for that. And just finally, on any comments on BFSI vertical, Angan, anything in terms of the investments made here and opportunities to target larger tech pools?
Yeah. So, Apurva, great question. We've been very bullish on BFSI, as you know, the last 3 or 4 quarters. We've seen growth in BFSI. As you know that October, November, December is a seasonally weak quarter as far as financial services is concerned. There is a lot of furlough. But you must look at our year-on-year growth. Our year-on-year growth still continues to be double-digit on BFSI. We are very bullish on that. I strongly feel that we will bounce back well in 4Q. As far as BFSI is concerned, I don't see fundamentally any problem in that business. Your second question of targeting large budget pools, that has always been our endeavor. We are having a lot of conversation with some the big clients, both in Americas as well as the rest of the world region. But it's a question of converting. Like I said, those pipelines are strong. We will need to close those deals and convert them, and that is what we'll be focused on as far as financial services is concerned. But overall, we are pretty bullish on that segment.
Got it. Thank you, and I wish you all the best.
Thank you, Apurva.
Thank you. The next question is from the line of Abhishek Shindatkar from InCred Capital. Please go ahead.
Hi, thanks for the opportunity. Congrats on a good quarter and Happy New Year. Just one question. If I look at your commentary about short duration projects and tying with the large energy deal that we have mentioned in the press release, and combine that with the infra revenue growth in this quarter, is that one of the key reasons for the sharp growth in the quarter?
Yeah, so it is a combination of both, Abhishek, right? Look, our infrastructure business is doing incredibly well, like you have marked. Our large deal that we closed last quarter, we've not seen a ramp-up yet. We will see a ramp-up going forward. That could contribute. But again, the short-term projects, and I've clarified this earlier, let me clarify. Do not please look at a short-term project like a time and material 1 month or 2 month kind of a program. It's a proper domain-led work. It could be long-term work, like a 1 or 2 year work, but it's a definitive work, right? It could also be a 1 quarter work. The point we were trying to make is this quarter, Q3, which is a short quarter, which is driven by furloughs, some of these short-term, like we called it, which would be 6 months work, 1 year work, has enabled us to kind of ride through the furlough quarter. Now, will it add revenues going forward? We are hoping it does, and we are hoping that this continues to be a good revenue generator for us, because by nature, this is high-margin business. So we're pretty pleased with this revenue stream, and we will continue to focus on it.
Perfect. That's helpful. And just a request, historically, we used to call out, subcontracting percentage as a revenue. If you can share that, that would be really helpful.
Yeah. So, Abhishek, look, I can't comment on it right now. Let me and Kamini think about it. One of the reasons we've gone away from reporting that is because it gives a wrong picture. In a lot of our work, subcontractors may be an essential part of our workforce for various reasons, because of the geographical reasons or the kind of work that we need to do for a short-term basis, which we would like to continue subcon. Our only commitment to you, Abhishek, would be that we will continue reducing our subcon going forward, and that is clearly showing up in our margin profile.
Absolutely. The reason I asked, sir, is because, other expenses put together has seen a very sharp improvement as a percentage of revenue. And within that, I think subcontracting gets captured there. So any color would be helpful, but not necessarily on the call, maybe later. Thank you, sir.
Thank you, Abhishek.
Thank you. The last question for today is from the line of Ms. Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Yeah, thank you for the opportunity. And sir, congratulations on the impressive set of number despite slight decline on the TCV side. That raised my concern. Like earlier you discussed on the call that TCV will going to be better in the upcoming quarter. So sir, if you can explain me TCV segment wise, that will be very helpful. And another question on the revenue mix side, that earlier we separately disclosed Europe mix. So this time we have not. So if you can comment on that. Thank you.
So on the TCV front, again, segment-wise reporting, we'll think about it. But look, it is a little hard for us to report segment-wise because, certain deals could be cross-segment, cross-technology. So a little hard for us to report segment-wise. But look, again, Jyoti, I don't think that's too much of a matter of concern as far as I'm concerned. Our signings have grown 9% year-on-year on a 9-month basis. I mean, that's a strong performance, and you must appreciate that the December quarter was a short quarter. We will try and maximize signings in 4Q, and we will see how that goes. And I keep saying, look, as long as I don't lose any deals, and if the deals are getting pushed out because of client issues, then I'm okay. Then, it's not so much of an issue, but we will try and maximize what we can. What was your second question? Can you repeat that, please?
Yeah, second question on the revenue mix side. Like it seems we have not separately disclosed figure for Europe this time. So could you explain on that front, or could you tell me how much percent that we are contributing from Europe?
So Europe we do not report, but we report what is called the rest of the world revenue, and we will continue to report rest of the world and America separately. So the Americas still contribute about 85.7% of our overall revenues, and the rest of the world is about 14.3%. Now within that, how much is Europe? I mean, that I do not think we will report. I mean, our stated policy is to report the Americas and the rest of the world, Jyoti.
Yeah, that is fine, sir. That's okay. And last question, sir, on the ERP side, like earlier you discussed on the call, that if you can give us picture, how much, traction we are seeing on that segment.
Yeah. So Jyoti, we are seeing good traction on that segment. We've turned the corner. The quarter that went by, we've delivered 0.5% quarter-on-quarter growth. We are confident that this business will continue to grow going forward. We believe that our partnership with all our partners, whether it's JDE, whether it's SAP, has improved, and you will see this in our numbers going forward.
Okay. Thanks a lot, sir.
Thank you, Jyoti.
Thank you. Management, we have another last question coming from the line of Mr. Krish Beriwal from Nomura. Please go ahead.
Yeah, hi. Thanks for taking my question. So I just had one question on the rest of the world part of our business. I understand that it is still very early days, but with Manju joining us, Angan, can you share us some initial color on how we plan to expand our presence in this geography? And what kind of margin headwind can we expect from this in the initial period?
Yeah. So, Krish, look, I mean, Manju's joined just 1 week back, right? So we have to give him some time. But what I can commit to you, Krish, is once Manju is ready with his plan, we will come back to you and we will have not only Manju, but both Manju and Roop talk about their regions in terms of what they will do, what customers they will target, what investments they are making. Now, we will continue to invest in the rest of the world. That's our commitment, because that's a business that we are very clear that we want to scale up, which is why we are hiring a lot of leadership, and we will continue to invest. So it will not be fair for us to look at margins from a regional perspective, because for the next foreseeable future, Europe will be on an investment phase, not only Europe, but Asia even. So I would request you to look at margins at a company level while we continue to invest in the rest of the world region. Krish.
Got it, sir. That's helpful, and I'll wait for that update. Do you share the number of Fortune 500 or G2000 clients that we have?
Sorry, what was that again?
Do you share the number of Fortune 500 or G2000 clients?
No, we don't. We don't. As a policy, we don't, Krish, in terms of number of Fortune 500 clients that we work with. But suffice to say, like I've said it in the past, our top 10 and our top 20 clients have grown upwards of 3% quarter-on-quarter.
Got it, sir. Thank you, sir, for that, and best of luck.
Thank you, Krish.
Thank you. I would now like to hand the conference over to Mr. Angan Guha, CEO and MD, Birlasoft Limited, for closing comments.
Thank you. So, look, I first want to thank all of you for joining the call today and for your questions. I really appreciate your interest in Birlasoft. Over the course of this financial year, Birlasoft has experienced consistent revenue growth, as you all have noted, quarter after quarter, and we've achieved some significant milestones along the way. Now, as we make our way through the final quarter of FY24, our commitment to you is that we will be very focused on execution. We will continue to build on our customer-centric organization that can take us to the next phase of our growth journey. I will obviously look forward to speaking with you again next quarter, but in the meanwhile, if you have any questions or comments, please feel free to reach out to Abhinandan for any clarification or feedback. So thank you once again, and have a good evening.
Thank you. On behalf of Birlasoft Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.